درود بر همراهان عزیز کانال لاین تریدرز. با توجه به انتشار ویدیوها و محتوای کانال لاین تریدرز در کانال‌های دیگر بدون ذکر منبع و بعضاً با کیفیت پایین‌تر از نسخه اصلی، به اطلاع می‌رساند جهت دسترسی به نسخه‌های با کیفیت و آخرین دوره‌ها و اخبار در کانال اصلی ما به نشانی لاین تریدرز _CC عضو شوید. با تشکر. مدیریت کانال لاین تریدرز.
All right, folks, good afternoon. Just want to do a quick review for today. All right, so I learned a lot of things today in live streaming. I thought I was toggling from one chart to the next that you would be able to see, and I didn't have that set up correctly, so I think I have it set up going forward. I was going to do recorded reviews, but it's a lot to just edit, so I'll just do this. Each time we do it, it's quicker. Once it's done, it's one and done. So if I make any kind of errors or, typical things I edit out, it'll just be the rough cut. So that's the way we'll do things because it's too much time. And I have a lot of it, 40 weeks of this. So, all right, here's the daily dollar index. I mentioned this morning. We were up inside this fair value gap. I mentioned how we were just about to come up into the top of it, and we ended up touching it later on in the morning, and then we saw it retrace lower. That was a reason for concern. I mentioned how we had just a little bit of upside still for dollar, and then that would be a little bit of downside for euro dollar, cable, E-mini S&P, and that would create a situation where it's not a lot of movement, but we still have to be mindful of it, and I'll show you what I mean by that. If we go into an hourly chart for dollar index, here's the movement up into the top of that fair value gap on the daily chart. Notice the bodies of the candles, how they respect the fair value gap high. I love seeing that, and I love illustrating that to my students because it communicates, number one, precision. It communicates organization and boundaries. And if price can respect these types of boundaries, it provides, in my opinion, a probability in the future of it doing similar when other factors are supporting it. So the market trades up, and then we have that weakness intraday. All of this was Powell, Fed Chair Powell, smoking mirrors. So let's go over to euro dollar real quick. And I believe I don't have it here. Do I? No. Let me see if I can get it on. Yeah. That's not it. Bear with me 1 second, folks. All right, so here's a euro dollar today. And as I mentioned, we had just a little bit more downside, and then we had the market rally up, attacked buy side liquidity here. And if you look at this small little imbalance, notice how we have delivery from this candle's low back up to the close. We open on the next one, deliver to the downside, start basically where this candle's low is. Look at the candle's low, 1.07619, and the high on this one comes in at 1.07622. So just a little bit above, just a little bit above the low here. And then we completely return all the way back up to this range. So notice how it stopped right here just by bumping into this candle's high. 07663 and 07663. So it leaves a small little fair value gap there. Why did it stop dead in its tracks there? This is a balanced price range, both directions. We left it, came back, tested it, left it, and came all the way back up. It can revisit the entire range, but it's generally not likely to go through, especially if we have a fair value gap here. They'll treat that later on as we do here. And the high on this candle I think is interesting because it goes to 07666. Not that that's a scary number. I'm just saying that I find it interesting. It just went just a little bit above that. So all of this is Powell, chairman. They had a appointment to have him interview at one time today, and then they changed it later on. So all those were coincidences, if you want to call it that. And then we have obviously the S&P. Look at this now. These are not indicators. They look like indicators, don't it? Like, wow, ICT finally caught up with the indicator crowd. They are the Dow Jones Mini and the NASDAQ Mini, respectively, just plotted on a line basis. And I covered all that this morning in the live session. So I'm trying to just go over briefly with a review. That way I'm not spending too much time because you guys have a lot to go through on that live stream. All right, so I got with you all 8 o'clock or so this morning. I mentioned that, let's get a 5-minute chart up here. See, this is the reason why I like to do pre-recorded, because it allows me to have the charts exactly how I want them, and I'm completely obsessive about how I present, and I want to see certain things look nice and neat. And I covered all this morning. It's all in the live session, and I mentioned in the recording or live session that you'll see in recording now, this area right here. I mentioned this morning as a potential for in the afternoon. If we fail to go much lower, in other words, if we shake off any lower prices, the market would want to go back up into that during the afternoon. We got that obviously here. We traded up into it, and I pretty much ended the live session there. I covered all of the difficulties of reading price action like this. If you're zeroed in on a very small time frame, when you zero out your charts with about that much detail, it's a little bit better to digest, and that way you're not looking at every tiny little fluctuation and making a big to-do about it when it's really not that big of a deal. Especially if you know you're in a small consolidation like this, the best thing you can do, and I failed to mention this today because I was enthralled with all of the price action in kind of communicate how you would eventually hurt yourself in a day like this. And I was communicating also how to predict a choppy morning session. So without stealing the thunder from the actual live session, I'll just move on into discussion beyond that. All right, so looking at it here, it's again rather choppy, but when you dial in on a very small time frame, like a 1 minute chart, you're really just looking at too small of a market structure, okay? Especially while it's inside of a consolidation. You can use micro market structure, like 1 minute, and sub 1 minute, like 15-second, 30-second market structure, when the market is moving, when it's dynamic, when it's animated, when it's trying to get somewhere real quick. And I was explaining this morning how it's very difficult to get a read on that, and I was showing every possible scenario I saw if I was trying to squeeze the trigger and do something in that small little range. I'm not going to say it's noise, because that defeats the whole argument that I make all the time, but it's not favorable for anyone to want to navigate in that until we get to a specific time of day. And that was kind of like the diamond of today's session. So I don't want to go into it a lot here, because I teach it in the live stream, but let's go and look at this run here. In the day, later in the afternoon after the live stream ended, I tweeted, I went back to Twitter, and I don't know if you have any questions. I don't know if you commented. I don't know if you hated what I did today in live session or if you loved it. I'm not looking at Twitter, so you kind of like want to use that just as a means for me to communicate. That's it. It's a one-way transaction. I'm tossing it out there in the abyss. If I'm looking at a level, you'll be notified there. If I'm looking at a draw on liquidity where I think the market's likely to go up to or down to, you'll be tweeted with that. It's not a trade signal. It's not an invitation for you to take a trade. It's just simply for you to go in and observe real time what it is I'm looking at. Okay, so that way you can follow along, tape read when we're not doing live sessions. If you don't want to get a lot of tweets and be pestered during the market hours, you want to turn off the notifications. Otherwise, leave them on. That way you'll be able to be prompted. You can take a look at your charts while you're working, and I'll leave that up to you for requests for forgiveness for stealing from the boss's time. I'm not advocating it. I'm just saying that's, you got to take on the risks by doing that. So we had this level up here, which was a 5 minute. Scroll back here a little bit. Right up here, you see that? I mentioned this in a tweet, and the way I do it, in case you aren't aware, if you're new, when you subscribe to me on Twitter, and you can get my official Twitter account on my YouTube channel up in the upper right hand corner on the main page, it'll say official ICT Twitter. That was the February 3rd, 2023 candle on a 5 minute chart, as you can see here, and I give you the time, which is 12:55. So that way it allows you to go into the time frame on ES, literally look at that candle, and you'll recognize it. And what I'm doing that for, number one, is I'm teaching you how to identify it. You may not be able to have the experience to see it right away and jump right to it with your eyeball, but I'm queuing you up before the market reaches up into it. Let me put it back on. So prior to it running up into that level, I tweeted, I said, note that right there. And we were trading around here. And it reached up into it today. And then we came all the way back down. Once it hit there, I said, leave it alone, rest. Because all of this is wild manipulation. Wild manipulation. And it's reminiscent of seek and destroy. And seek and destroy is a market profile where you will literally get your hinder parts handed to you. If you don't know what you're doing, you hold onto a trade too long, you're going to regret it. Market dips down, takes out sell side here. In the morning session, I was talking about 4106.50. Okay, and we ended up hitting 1/2 of a point or 2 ticks below that, and that comes in here with this low at 4106.00 prior to all of this run up into a level I tweeted later in the afternoon. Taking that on its own, okay, think about the level of opportunity that exists by knowing that type of information. I cover why the 4106.50 level is considered at all this morning. This range over here is this imbalance. Oops, shouldn't have touched that. I know there's a lot better way to do this, but please just bear with me, okay? Because this is going to save me a whole lot of editing time and compression time. So you don't really see too much of it here on the 5-minute chart, but if I change it to a 15, right there it is. That candle for that blue shaded area where price dipped down into it for a discount comes in at February 1st, 2023 at 14:30 on time. And your time always has to be set to New York local time. And that way you'll always be able to calibrate everything I'm prompting you on Twitter. You'll be able to go right to the right candle and you'll be able to track everything everybody else is following along with. All right, so this imbalance on the 15-minute time frame extends further up to here. So you want to have that on your chart. Presently, right now, we have buy side resting just at this high here. And over here as well. Okay, so you probably hear an airplane going by. I apologize. So high up, this vantage point, you can hear the airplanes. All right, so I mentioned on Twitter, what time frame was that? 1 minute? I'm going to cover the new week opening gap and then this part, and then we'll be done. So I promise I won't keep you too long. On Twitter, I was walking you through, and for the life of me, I can't recall because I don't have the right chart up. Yeah, I don't have the right chart up. That's what I hate when it does that. Skews it. All right, so we have a fair value gap here, order block, 2 down closed candles, market trades back down into that, and we were looking at how the market may reach up into 41.30, and then I said that the draw would be 41.34 1/4, which happens to be the low of the new week opening gap, or basically the opening price on Sunday. Okay, so I kind of like walk through that. What was it, on Monday? And then just to show you where we're at with that, that's what these levels are here. Here's the Friday close, consequent encroachment, which is the midpoint of Friday's close, and where we opened on Sunday. So the opening price on Sunday's trading is here. And that's Friday's close. So we split that in half. That's this level here. And we mentioned this yesterday, how it worked around. And if we're consolidating, remember what I said about it, when we're in a market that's consolidating, when it's not trending, okay, these levels, these 3 specific levels, not zone, don't think of it as a zone, it's too ambiguous. Very specific levels. Look how price reacts to it. Okay, it's very respective of it there. And it gravitates right back to it here. Goes through it, yes. Look at the lows of these 2 candles here. See that? Look at the respect of the consequent encroachment right there. And now we're through the buy side, and we'll be looking for the upper portion of that range there. So all of this run up here and then way back down. The reason why I call this seek and destroy is because, number one, it starts off consolidated. It looks like you can find a trade if you're zeroed in real close. And every time you get in it, it takes the short-term high out, takes the short-term low out. It keeps going back and forth, back and forth. And then finally, you get this big run, and you think, oh, yeah, that's a nice big run. But this is the murder right here. It comes all the way back down. Anyone that was long from over here is not allowed to be in this long. And then they're going to keep on climbing it all the way back up until we get to perhaps this area up here. So let's go into a 1 minute chart and look at that. Nice buy side and balance, sell side efficiency, sell side taken, ran up. Small little gap in here, watch that. Not sure what the hell this is. 41.75. Something from an earlier day. Don't worry, I'm not hiding anything from you. I just really don't recall what the hell that level was. All right, got 11 minutes remaining into this session here. The last hour of trading, you want to really do a detailed study every day. And I'm going to ask you to use my annotations today on the live stream. Any day that I do a live stream, I'm not going to log anything on trading. It's just too much work. I'm already doing a lot as it is. So the days I don't live stream, I'll log things. That way you can go through your charts and look at it that way. So just use the annotations and the things that I mentioned during the live session, and that's plenty. All right, so we pull back into this buy side and balance, sell side efficiency. Does it want to run up into and touch the high end of the 15-minute CIBI? Remember, I updated the range, expanded it higher. It was on a 5-minute chart originally, as I mentioned this morning, and then we calibrated it to the 15-minute time frame, making it a little bit wider. I was actually surprised to see how many people actually was watching the live session today. It's a little intimidating, actually. I mean, it's one thing when I'm on a Twitter space and I have like, 15, 16,000, sometimes 20,000 viewers within an hour or so after doing it. But 70-some thousand people, listening to a live session, they didn't stay the whole time, obviously, but that's a lot. It's a lot of people listening to somebody at one time. And no F-bombs. How about that? So that's actually a 5-handle run if you take a look at it. From here. Here, that's your fair value gap. Okay, one single pass through. Previous candle's high here, and the next candle's low. The difference between those two candles, that's your fair value gap right there. The market dropping down into consequent encroachment, that's the highest probability entry point. The easy guaranteeing that you're going to get in would be institutional order flow entry drill, which is just at that low or one tick below it. So either one of those, notice it's just two specific price levels. It's not a, what would you call it, a demand zone. Okay, demand zone. What do you do with the demand zone? How do you pick your price? Which one do you get in at? It's too ambiguous. We have a very specific criteria, and we're looking for those very specific price levels to be used as our entry. So from 41.75 to 41.82, that's 7 handles, and it doesn't even need to trade to the top of the 15-minute fair value gap. or in this case, SIBI. And that's what I'm referring to when I talk about looking for entries for trades. If you can find something that's going to deliver more, and I prefer preferably 10 handles. If it offers the opportunity for 10 handles, which in this case you can see it 41.75, consequent encroachment, which is the middle between this candle's high and that candle's low, and I'll show you what it looks like on the fib. You like these interactive market reviews? Oh, ICT's never going to live stream. All right, so if you right there, okay, so 41.75 and a quarter. Okay, so that would have been rather consequent encroachment. So from here up to the high of that 15-minute SIBI fair value gap, which is the shaded area here, is 41.85. So that's essentially what, 10 handles, and that's like the minimum threshold for me when I'm teaching my son. Look, if you're looking for 5 handles, look for a range that you have the potential, not that you need it, but you have the potential to see 10 handles movement in your favor. So I outlined this. I just showed it to you in this session. I expanded it to the 15-minute time frame. It's delivered here. Okay, so there's over 10 handles in that run right there. No cherry picking. And that is your last hour session. So my question to you is, does this seem complicated? I mean, it probably seems complicated at first when you first listen to what I'm saying because you don't understand the terminology. But once you see a few weeks of this and you start seeing, okay, he's pointing to where he thinks it's going to go. I'm waiting for this thing he calls a fair value gap. It's only 2 price levels I'm looking for: institutional order flow, entry drill, or consequent encroachment. That's easy. That is easy. Okay, that's easy, easy, easy. The hard part is knowing how to read the candlesticks live. What are they going to do next? Why should they perform a certain way? You don't need to be afraid, folks, okay? But you have to be respectful of the risk, and you're all trying to do this too soon. You're risking your funded account. You're risking your sanity trying to chase it too fast. Just relax. I promise you, we're going to have a whole lot of fun this year. It's costing you no money, and I'm showing you every single day consistency, precision, logic, real algorithmic theory in action, all time and price oriented. Right here in front of you, live. No cherry picked, no hindsight after the fact stuff. I'm removing everybody's excuse. You have no excuse now. I'm having so much fun doing it. I gotta tell you, I really am wondering what Twitter's like right now today, but nonetheless, I think we've covered everything for one day today. I haven't settled in on what I want to do for the next live session. I'm certain it won't be tomorrow. I'll let you know if it's Thursday or Friday. And again, the only way you know that for certain is to look at the tweets that I send out on my Twitter account. And that way I'll let you know when we're going to meet again. Okay. I believe what we'll do is we'll meet at 8:15 in the morning, New York local time, when we do. And I'll just have simple charts with annotations because I spent a little too much time. I thought I was going to get through it sooner than I did this morning. This way, if I have all my charts annotated beforehand, I can literally show you the charts. You can screenshot them. And then when I go off that chart and use live data, you'll have everything in front of you. You can have the screenshot in front of you, the levels I'm referring to, what I'm looking for. That way, everybody is on the same page. And we'll walk through the morning until the session is satisfying to me. It doesn't mean that it's the end of the run for the day. It just means that that's enough for me for one day because I don't want to spend my whole entire year on YouTube. But I believe it'll be, time well spent together if it's done efficiently. And that's all I'm trying to do. So if you like what's been going on, if you want to be a source of encouragement for me, all you got to do is give me a thumbs up on this video, and I will catch up with you by way of Twitter tomorrow. I'm certain of it. Until I talk to you next time, be safe.